Curzio here, going for a nice midday workout real quick before heading back to the office. I am driving. I like sending you these live updates, which is pretty cool. Want to hear your comments, frankcurzioresearch.com. But I wanted to give you a quick update. We all know the market's coming down a lot. Over the weekend, we've seen tons of store closures. We've seen the Fed bring interest rates down to near zero. We've seen fiscal policy announcements of $700 billion, even though fiscal is supposed to induce spending, and I don't know what consumers are going to spend it on, given that most stores are closed, right? So it is pretty crazy what's going on. But I think what we're going to see, or what we need to see, is a closure of the markets. And I know it sounds crazy, and to be honest with you, I don't know how they can implement something like that. But it has to be on the table, because if you're leaving these markets open, we could see another 20% correction from today. And I'm including the 8-9% that the markets are down now. If I had to tell you from a valuation standpoint, considering that coronavirus will start subsiding in about 6 weeks, maybe end into 3 months, we're fairly valued on the market right now. And I know that sounds crazy. Remember, I was telling you how the market was going to fall 30% 4 weeks ago, and everybody thought I was crazy. So I know right now it's panic mode. We have the people on TV and our presidential administration, everyone saying, don't panic. They're panicking more now with the markets down 30% than they ever did, which seems like a capitulation a little bit. But getting back to the markets and why they need to close, we are going to see zero good news on the economic front. I mean, all the data that's reported, whether it's retail sales, whether it's housing, whether it's GDP, is going to show that we're going to go into a recession, which is going to be temporary. All this data is going to be negative, and everything is closed. There's no room over the next 2 months where you're going to see anything positive, which is going to result in what? You're going to see a lot of people with 401ks just start selling. I mean, it just makes sense. We're talking about people that don't have working power, right? So if you don't have working power and you're sitting there and you're already down 30%, it's gonna be a ripple effect where it's not gonna be sold on valuation, it's gonna be sold on fear. And the fact that there's gonna be no good news at all. Every data point that we report over the next 6 weeks, 2 months, 3 months is gonna be horrible. But especially over the next 6 weeks, where everything's closing to around April 5th, there's zero good news. Everyone's going to be home. There's going to be nothing. So it's just going to result in more and more selling, since we don't have a vaccine around the corner already, which would be a positive. The numbers are going to explode. They're going to get a lot higher in the U.S. Fiscal policy, announcements. I mean, the Fed is almost doing everything it can. They just announced on Sunday, and fiscal policy. Again, it's not going to work because there's no place we could even spend that money if you give us free money or give us checks in the mail, because everything's closed. And you order something on Amazon, it's going to take you 2 weeks now. So we have to be really, really smart on this. I think the smart move is to try to find a way to close the markets, because when you open them up, it's going to be much more organized. You're going to see the coronavirus subside, and picture this market without the coronavirus and as much stimulus as we put into the markets. If you look at it that way, the market will explode higher if we didn't have the coronavirus right now, considering the Fed's measures that it's taken. In 6 weeks, we're going to see much, much better numbers, which is very, very good. And once we see those better numbers, it's going to provide a lot more on the sentiment front, where people will be more comfortable buying stocks. And I think you're going to really see this market take off. But if we keep this market open, again, it's very hard to do. It sounds crazy, but if we keep it open, it's all bad news for 2 months. And if you're sitting there in a 401k, these people are going to sell out. You're going to see another 15-20% decline from here, which we all don't want to see. From a valuation standpoint, I'd be picking away. Just very, very, very little here. I know, but when you're scared and when it's extreme fear, what we're seeing right now, I mean, this is 25 years, probably sign to really tiny bit start picking away, because if the market does close and you're long when it opens, you're going to be a very, very happy person. So I'm just putting a little bit of money to work right now. And that's what I'm going to be advising my subscribers over the next few days. So, again, questions, comments, frankcurzioresearch.com, and I'll report back to you soon. Take care.